We're here to empower high-income earners to gain back control of your time through financial independence and stop trading your time for money and start letting your money work harder for you.
And hey, if you want to meet other high-income earners on their FIRE journey, join our High Income Earners FIRE Facebook group. Every month, we'll have guest speakers and we'll share about what our team is currently working on and allow you to share what you are working on with other high-income earners.
Hey everyone, welcome back to High Income Earner FIRE's podcast. It's Cody A here. I'm with my co-host, Eileen Prag. Today, we're going to have a very realistic and freestyle chatting between Eileen and I. We were actually going to record something, but we figured out our offline chat was actually really good. So I stopped Eileen and said, we're going to hit the recording and we're going to just free chatting. We're going to talk about what the roadblocks. Eileen's still buying properties. On my side, a lot of the deals just won't work because of the high interest rate and all that. But Eileen was able to find some golden nuggets of seller finance, off-market deals as usual, and how she negotiated that. So hope you guys get great value from this episode, and we're just gonna get it going. So, Eileen, how's it going?
It's good. It's good.
Okay, so we're gonna take it back. I know you kind of told me offline that, you close on one property. This property is an interesting one because, the original buyer locked in the property at the beginning of the year, but they have to back out. So kind of left the sellers in a pinch. And then because the sellers in a pinch already lost 1.5 million of the selling price. So he was forced to kind of reduce the price. So can you tell us more about that?
Yeah. So it's always interesting because we're consistently looking and underwriting deals. And so it never hurts to go back to your old deals that you don't win out on or any of the deals that you don't win out on. It's good to go back and just check in on, hey, how's this property going? How is this property doing? Or just congratulate the broker. It's just another touch point basis to get back in front of the broker, be back on top of the mind, just check in to see how things are doing because you never know what's going to happen. Something like this could very well happen, especially in today's market. And it's not unheard of too, where, the seller has a property under contract, they choose and select a buyer, but with the current environment, the current buyer that they selected had to back out because the numbers no longer worked with the interest rates rising and everything like that. So they decided not to move forward with it. But because we had gone back later on and checked in with the broker and just wanted an update like, hey, how's this property doing? Congratulations if you guys closed it. And they said, they gave us the full background on it, on what had happened. And we're like, well, is the seller still looking to sell it? And where are they at in the process? And so what ended up happening was the property was still on the market. They were still looking to sell it out, but now we had a little bit more of a negotiating power to talk with the seller, try to figure out what would work. And because of our track record and our ability to close and what we've been able to do so far in that market, the seller decided that he wanted to work with us. And we're currently in the process of putting that property under contract right now.
Yeah, for people who knows a lot of time during since February this year, a lot of sellers are not willing to adjust because they're still kind of fixate on the low interest environment. I can still sell it for this price. My property is cash flowing. Why am I going to give it away? Right. And one buyer's come in, submit an offer, finance then go through, second one, maybe a third one go through. Then they start breaking them down inside. They start questioning themselves. So as a buyer, it doesn't hurt to go back and ask that, right? And then, they're slowly grinding down their patience. And if they are not cash flowing or they got into a bad deal for whatever reason, you could have scooped up a good deal, but you really have to do your own due diligence, right? Like Eileen make it work. I'll let Eileen talk about it because she got off market. She followed with the broker. She also got a seller finance, right? So can you tell us more about the seller finance side of things?
Yeah. So it's like working with the seller, trying to figure out what's important to them and why are they looking to sell. That was the main thing because, and for us, it's like, how can we make the deal work? Because if we go, we go to the bank loans, we go, agency or bridge or whatever like that, those numbers don't work out in our underwriting. Mm-hmm. And so what was important to the seller was they wanted to exit the property. They wanted to make sure they were working with a buyer who could close because they had already got burnt from the first one that didn't end up closing. And so that was a really important factor for them. And then as we got into it, there were some other things that we found out, like, taxes was important to them and everything like that. They didn't want a huge tax burden at the sale of their, once they sold their property for this year. So it's like, how do we accommodate that? How do we strategize with him? And how are we going to accommodate, what's important to him and what would work for us and for our investors as well. And so it's just having that open conversation with them and just negotiating and trying to figure out, like, these numbers here would work for us if we got the property at this price. And then if we did some type of seller financing, would you be open to that? And so it ended up being, he said yes, that he was open to the seller financing option because it would alleviate his large tax burden for this current year. He'd be able to spread it out. Also, he was looking to invest into the property, also take some of that depreciation as a limited partner as well. So like looking at all the different aspects of it, you have to get a little bit more creative in today's market to make the deals work and to make sure that you guys are in a comfortable place and that we are in a comfortable place as we're going into, uncertain waters and where the interest rates are going and everything like that. So you have to look at different ways and figure out, what are some creative solutions that can make it a win-win solution for everybody.
Yeah, that's very great. And a lot of people, when you're the buyer, you only think as a buyer. When you're the seller, you think about as a seller. But a lot of time, buyers or sellers are quite equal. But in this case, since it's a really more of a buyer's market, shifting from seller's market, seller actually, if they really have to sell at this point, there's probably certain reasons why. Maybe personal reasons, but more likely to be a financial reasons, right? Otherwise, any seller who's not in a pinch will probably just continue to rent their place because they know they can't sell at the optimal price, right? So as a seller, if you know your numbers, if you're not in a pinch, price accordingly. But if you're a buyer, just knowing that this is what sellers think, no matter what they say, really find out the real reasons, right? A lot of time you might have to kind of push your realtor a little bit, right? Your broker a little bit and dig deeper, right? Tell me the whole story. Tell me when the seller bought the property. What was the story there? How long, how much money did he put in? What she put in, right? So the more you understand the other side and their needs, the more you can actually make the deal work. So a lot of people might be like, hey, Cody, you're asking too many private questions. But a lot of time as an investor or as a business owner, if you don't ask, you will never get. So if you ask, the worst thing is they'll say, Cody, why are you asking these private questions? Right? Okay, maybe it's not the right seller then, right? Because the numbers just don't work on our side, right? So it doesn't hurt to ask.
Yeah, it doesn't. And so, you just try to figure out the entire story and then how does it make it work? And come from the place of what's in it for the sellers. Like, why do they want to sell? What's important to them? And then look to see if you're able to accommodate and negotiate some types of terms and conditions that would meet their requirements and what they're looking to accomplish. But at the same time, keeping in mind what you're trying to accomplish on your business side for yourself, for your investors, and and then create some type of win-win situation, and then we're looking at long-term impacts also. We're going to be in it for a little while. You want to, work with the good sellers, the good brokers, and that relationship building is so important.
Mm-hmm, mm-hmm. Yeah, I agree. And I think I was overhearing at Grant Cardone's podcast, and he's flying to France because he couldn't find any bigger deals to buy in US. And just for people who doesn't know, this is according to Grant Cardone, quote unquote. He said BlackRock, which is the biggest real estate fund, if not private equity fund, they lost 1.7 trillion in the last quarter. So, for a big institution like BlackRock, when all the funds or all the ETFs are throwing money to them, they're kind of forced to buy. And the only reason why they can survive such a big overhead of all the people they hire, keep taking their money, is because they get paid, whether it's a management fee or acquisition fee. So for them to survive, they have to keep buying, even though it might not be a good deal, but they're playing acquisition, AUM, asset under management game, right? So for smaller or medium-sized investor or investment group, we have more of a leverage play. We're not forced to buy something. So we can choose better things that we ourselves will put our money in, or we can walk away, right? So there's kind of a difference there. And it's not like the bigger you are, the less likely for you to fail. Like even the biggest BlackRock can lose so much money, maybe not on paper, but even equity wise, it just kind of shows that they were, just kind of like ETF, right? Many people invest in ETF. Their mandate is that more than 90% of the money has to be invested. So even though if they know the market is going down, they could kind of put in different things, but their money has to be in the market, right? So they're kind of forced to do that. And a lot of the real estate fund are similar as well, because that's how they get paid. If they don't utilize it, they can't charge a management fee, right? Do you agree with that, Ellie?
Yeah, no, I agree.
Yeah. So besides the seller financing and off market, going back to the old deals, finding out what seller really wants, what do you think you were still able to close on 3 properties, potentially the third one, in this kind of market? Like, what are other secret sauce?
I think it's all about the relationship building with the brokers that you have on hand, the relationships with other operators, and then just underwriting, continuously underwriting, because I can't stress about how many deals we had to underwrite and look and try to look under every single rock and try to make things, not just make a deal work just to make the deal work, but actually find a good deal. Because especially in today's market, what he said was, be greedy when people are fearful. So even though people are taking a step back, there's still deals out there to be made, and just having that optimistic outlook and adding some more additional conservatism into your underwriting so that you can hedge against, increases in interest rates, cap rate compressions and everything like that. And all those types of factors, and having enough reserves to cover any potential risks or unknown unknowns. Putting all those, adding all that extra conservatism in there as you're looking for deals, and then going back to old deals and just trying to overturn every single rock you can, underwrite as much as you can. There's a lot of opportunities out there. There's more room for negotiations now. We've heard a lot from the brokers in today's market too. There's not a lot of offers being made either. And so brokers are looking for deals to be presented to them so that they can bring it to the sellers. And you never know. That's the main thing, is like, you'll never know if you don't ask.
Yeah, that's definitely a lot of golden nuggets there. Again, it seems all great when Ali is that we're closing on a 34-unit multifamily. My first reaction was, okay, you would still be able to close. Hey, this is what's everything that goes behind the scenes. And we kind of like unveil the curtain and let you guys see what's really going on. And it doesn't mean the deal will go through, right? It's still going through due diligence. Anything that falls apart might fall apart. Right. So if you think about, if you underwrite 100 deals, you find out 5 might worth the time to put in an offer, maybe lock in 3. Once you go through stuff, maybe there was only 1. And all of a sudden something changed, you might fall through and you're all over again. Right. So it's very important to have enough deals, and don't be afraid to continue to underwrite more. And if the numbers don't make sense, don't force it. Right. We've seen, like, I don't know about your side, but in my circles, we're seeing a lot more real estate investor, especially starting out just a few years back. They're used to the market kept going up, low interest rate. And a lot of them were like, flipping properties for the quick money, burring, right? BRR. And all of a sudden the flip got stuck, negative cash flow. The burr, construction cost goes up almost double, and they can't burr. Yes, the cash flow might break even, but because of the high interest rate, they're in negative. Mm-hmm. And all of a sudden they're pinched, right? And I have friends who are, very big broker for private money, right? And I was having a catch up with him. Again, this is supposed to be kind of off record, but just so you guys know, I asked him a couple simple questions. How's your private mortgage business going? He's like, Cody, my business has been selling like a smooth sailing, like never been this good before. I asked him, why do you think that? He's like, Cody, think about this. Right now, going to a lender, you get, a stress test of around, used to be 5%. Now the stress test you at 7%. Coming to a private lender, B lender, C lender, they add 1% on top. They started from 8% to, all the way up to maybe 20%, but you don't need to stress test anymore. So a lot of people, whether they're flipping, whether they're burring, whether they just pinch for money and they overrun on their construction, they go to the private lender. And I ask him, so let's say compared to 10 years ago, what's the percentage of people are using private money and comparing to right now? He's like, Cody, there's way more people, like 20% of people are using private money. In the past, no one used private money, right? And I said, what's going to happen in the market for those people? Do you think they're over leveraged? And he's like, for sure. Again, this is only in Canada. We're in Toronto. This is what we see, but Toronto is the biggest market in Canada. 40% of our population is here, and quote unquote, I'm not going to say who he is, but he said a lot of people are going to get screwed. Mm-hmm. So if you're in that shoes, what we just talked about, again, every investor fell in certain level. Yes, there are people who got out, say that they timed the market, they sold it right before February. Good for them. But a lot of people are somehow, way or form are getting affected. And the best thing is that you just lay on the table, start addressing it right now. Because I know a lot of investors, like even a lot of brokers told me, Cody, just write it out. Interest rate goes up, you might hit your, what's that rate called? The moment your payment can't even cover your interest payment. I forgot what's a word called. The bank will start margin call you. I forgot what's the word, right?
Your DSCR?
Yeah, kind of like DSCR, or, if you pay $3,000 per month, used to be some interest, some principal, but interest rate goes up too much. You didn't lock it in, it's not a fix. The moment that interest payment go over 3,000, the bank will call you and be like, you need to increase your payment, or you need to make your amortization longer, right? I forgot what's the word for it. But anyway, you guys get it. And it's just best that you go and look at that right now and figure out plan B, plan C, instead of just kind of like, we'll write it out. And the thing might just snowball and it creates a lot of stress on you. It's not the best practice. And so anyway, that's just my 2 cents of things.
Yeah, I mean, I don't disagree, because I think we're seeing that not just in the Toronto market, but across all the markets in the US also. It is harder to get loans and place debt on properties and stuff like that right now. There are some lenders that we've talked to also where the banks have pulled out and just said, hey, we're not loaning anymore. We're not lending out anymore. A lot of them have cut the cord on some of the different properties that were already currently in the process of going under contract too. And so we're hearing about these stories left and right. And so it's like, you have to look at everything as a whole and have your plan A's, B's, C's in case things like this could happen.
That's a very great point. And also, Eileen, do you see on the investor side for, your capital partners, do they kind of hesitate a bit more to invest, even though there might be more experience and all that, but do you see more of them kind of holding up their money, even though they do have equity to invest? They kind of like, you know what, we're going to wait it out. I know it's a good deal, but we're going to wait it out. Do you see more of that?
Yes, there it is. So across the board, I think the capital space is kind of taking a step back a little bit. It's harder to raise money. Investors are waiting to kind of see where the market is going to go. There's a lot of talk about recession coming up and continued interest rates rising, where the market is going to go. And so there's a lot of investors who have taken a step back, but there's also those investors as well who know the market, and they know that if they can either leave their money sitting and, having a little bit of percentage rates, or they can invest in, a little bit more of a secured markets, get maybe like at least break even above market returns in like real estate asset classes and everything like that. And so you kind of get those two different folds where people who are already investing in real estate continue to do so. Maybe they might take a little bit of step back, just kind of holding off because, there's a lot of talk about there's more deals that are going to be made in 2020 at the end of 2023 and 2024. So they're kind of waiting to see how things kind of shake out a little bit. So you get a wide spectrum, but we do see a majority of them kind of, waiting to see what's going to happen in the market right now.
Mm-hmm. And the capital partners who are still willing to invest, what are they thinking? Different than other investors that are holding back.
It's either I can just leave my money here and just let it lose money to inflation, or I can put it into, into a secured asset like real estate and have it grow and have some type of cash flow, hedge more against inflation than just having it sitting in the banks. But it's more, I think there's more scrutiny on which deals they want to get into now versus before. It's like, let me just get into as many deals as possible. But now it's more of like, let me see the terms, making sure the debt is being underwritten with a lot of heavy conservatism in that number as well. So that's one of the big topics is what kind of debt is being placed onto the properties.
Mm-hmm. And do you see these capital partners kind of say, hey, we should probably put more equity in, less debt, and just to kind of deleverage and reduce the risks?
It's kind of all over, depending on the different investors and what their appetite is for risk. Mm-hmm. So every investor looks at things a little bit differently and what's important to them.
Mm-hmm. Yeah, that's fair. Yeah, I think, this episode is kind of just give everyone an update on, what's currently going on in the market. Some of you guys might know I was down in Florida. We're looking at properties for short-term rental, and just give you guys a quick update. Even on a short-term rental side, the rent that we're seeing January, February, March, April, supposed to be a good high season for all the Sunshine State, are slowing down as well. It's not that it won't work, but there's a hurricane hitting them, so there's supposed to be a shortage and all that. But we're still seeing the numbers getting softer, and we start seeing impacts of consumer spending less, even on that side of things. So we had a few deals that were on the contract. We have to let go because the seller just won't budge on the price, not willing to give sellers finance, not willing to budge on the closing day. And unfortunately, we just say, hey, we can't do anything. So we have to go, we kind of have to pull back. But because of all those experience, really do a lot of homeworks, build off of the power team and know who's a real deal, who's not, who overpromise, who underpromise, who can really deliver, right? So if you're in that phase of continuing to do those due diligence, it's not a waste of time, because when the opportunity is ready, you will be ready, right? But don't force it. But if the opportunity is there and you're not ready, you don't have the team. Now is the time to build up the team for that. Because now is the time when brokerage or your power team has more time to listen to you. Where in the past, they're just like, do you have a deal? If you have a deal on the contract, we'll talk to you. Right? That's kind of in the past when I call commercial people, it's like, do you have a deal? No? Okay, call me back when you have a deal. I don't care about anything else. Now it's like, hey, Cody, we should sit down and chat. What's your goal? Never had that chance before. Right. So take that as an advantage and work with the right people. And, now everyone's getting less busy. Yeah. And just to give you guys a gem, because you guys know, YEH Stock Option, and we invest, instead of investing in individual stocks, now for the past 11 months, we only invest in the index. We're using index to make cash flow 1.5 to 4.5% per month. Just kind of a quick update. My own personal account, we hit 4.5% for the last 2 months, not without, position being challenged, but we still hit it. So, if you're interested, just go follow me wherever. There's a lot of content there, and really, yeah.
Well, let's talk a little bit about your stocks, Cody. Because you're the stock expert, and what do you see people's sentiments in stocks? And especially there's a lot of talks about, the stock market is not performing how it was before. There's a lot of scrutiny in it, fear that's coming into it. Where do you see it going?
Yeah. So again, individual stock wise, I still think, it's kind of like tiptoeing on a time bomb. Right? Company as big as Shopify could drop 80%. Meta, right, aka Facebook, can drop 80%. So there's nothing too big to fail. But we pivot? We have to pivot our strategy to focus more on the index, because, like what Warren Buffett said, instead of picking a ship, we pick the ship. And we use our stock option, future option strategy so that we have a lot of room for error. So as long as the market don't move too fast, we make our cash flow, right? The market, for the last 2 months, S&P 500 surprisingly move up 8%, right? Whereas everyone says it's going to go down, but people probably forget. Usually during a Christmas period, from now to Christmas, there's something called Christmas rally. So usually the market goes up, but we don't know what's going to happen after. Maybe it will crash, just like COVID. But right now it's more bullishness, and usually that's what happened. So, we'll probably see more of a flat movement until the New Year's, and then we'll see what goes from there. But, it's not all sunshine and rainbow. I have a lot of individual stocks as well, and a lot of them are in the negative too, right? So if you have those, hey, I keep it real. But all my real money we put it into our newly developed said and done strategy since 11 months ago, and we have a lot of great success for myself and for my alumni, and see a lot of testimonials and all that. It's really, everyone's looking, whenever I talk with a lot of people, everyone's looking for that consistency, right? And a lot of times stocks don't give you that, and that's why our stock and option strategy goes really well hand in hand with real estate. And one thing I just want to add is it's very interesting because when real estate is going really well, people who know, but people who just fully focus on real estate is like, Cody, stock is way too risky. I have nothing to do with it. And now I'm getting a lot more people reaching back out and say, Cody, none of my flips are working. None of my burrs are working. So I think I should start investigating more stock option, right? I gotta jokingly laugh at it, but it's great to have multiple stream of income, right? And, Eileen, you have your own full-time, you have real estate and all that. I have my coaching, I have my real estate, I have my own portfolio. So any of those stop working, I have other income that fill in all the gap and more, right? So that's what I call a true financial freedom. So when people only has one thing, there will be times where they might be pinched and forced to do the wrong decision because they don't have a backup, right? So, just kind of open your mind, definitely do your own due diligence, but there's always things that work in this market.
So are you seeing people mostly holding on to the capital that they've already invested in the stock market? A lot of them are they pivoting into different indexes like you talked about, or the majority of them investing more into it and putting more capital into the stocks?
Just like kind of like your sellers or buyers or capital partners, everyone's in different shoes, right? Some people are like, Cody, I sold a few properties at the high. I have so much cash, and they're so happy about our said and done strategy. Like they make more than me, which I never want to broadcast this because I don't want to have anyone come to me because of the high return, right? Because 1.5 to 4.5%, if you annualize that, is a lot more than private lending, right? So I don't want to lure people in because of the return, but we preserve capital first, right? So we always look at how can we minimize risk, and if the market allows me to make money, I'll make money, right? And we're seeing those people who sold their property. We're seeing the people who were struggling, like tie in 5 contracts, couldn't find the partner, half money, half the track record, half the reputation, but they couldn't find any deals that work for the last 10 months, right? So they're like, Cody, you know what? I think it's time. I know you've been at the back burner, and it's time to revisit this. I need another stream of income to hit my own goal and all that, right? So we're seeing the people who sold it, people who struggle it. And of course, there's probably some people that in a pinch who have their stock portfolio lost more than 50%. And a lot of them are in the shoes where, Cody, I don't want to sell. And the question I ask them is, when you don't want to sell, do you really have the confidence you want to hold on those stocks for 10 years, right? If yes, totally fine. But if you just don't want to sell because you don't want to take the loss, but you make the wrong decision, then maybe you need to re-investigate that decision, because it's really painful to take losses, but it's still better to take a 50% loss than maybe 80%, 90% loss, right? And unfortunately, COVID really, everything goes up. So a lot of people just get the false confidence, right? And I'm saying my stock portfolio overall is down, but not my said and done strategy portfolio, right? Just that, if you buy any time for the past year, this year is probably down, right? But that's fine because all the stocks are blue chips for me. I want to hold the long term. But if you hold more like any stocks or anything in the crypto or all that, just be more careful. There's more more fear coming. And you got to make sure you know what you're doing, but don't let the fear stop you from working out towards your goal.
No, awesome. Thanks, Cody.
Okay, hope that helps. And that's if there's nothing else, that's the end of this episode. And I'll see you guys on the next one.
Yeah. Thanks, everyone. All the links mentioned in this episode are included in the show notes. And if you love this episode, please leave us a rating and review on Apple iTunes. The link is also included in the show notes. And we would really appreciate your help in spreading the word to more high income earners on how they too can maximize both their time and money.
Also, if you still haven't joined our High Income Earners Facebook group, you are missing out on High Income Earners community where we help each other reach our own version of FIRE.